Hello, everybody. Happy Saturday night. I'm watching the Texas basketball game, but it's almost over. It's Texas and Missouri. Texas is getting ready to win. Anyway, hope everyone's Saturday night is going well. Let's see what's going on with the daily factor, and we'll also look at Bitcoin, see if it's moving. And I'm kind of keeping one eye on the game. All right. Texas got this one handled. All right. A minute left, and they're up 14 points or something, or 16 points. All righty. The daily fact. Oh, first, yeah. I'm sorry, I forgot what I was doing. First, let's look at TradingView. Let's get out a Coinbase chart of Bitcoin. It trades 24/7. This is on Bitfinex, but it's 24/7. I mean, it's the same. All right, so looks like we're trading about 70,000. That's the first time I've seen a 7 in a while. We've seen a lot of 6s lately. You know, did we ever see a 5 right there? I guess, what was the low on that bar? No, we did not see 59 anything. The low was 60,100, at least on Bitfinex. So I usually check the Coinbase one just for whatever reason. Coinbase, the low on that was, oh my God, the low on this one was 60,001, not 60,100 like the other one, $60,001. That's a close call with 59,000. Anyway, whatever, it's rallying right now. It's up 3/4 of a point, so that is good. That is real good. All right, so it's time for the daily factor, which is my own proprietary metric, which I think is a better way of evaluating these funds than looking at yield. In fact, I know it's a better way of evaluating these funds than looking at yield. I even think it's a better way than looking at total return. I really do. I really do. Total return. I'll show you. Maybe we could talk about that in a little bit. But in any event, we have this show on every night, and we take a certain subset of the 220 stocks in the daily factor, or ETFs. They're ETFs, ETNs, ETPs, and also closed-end funds. And there's actually 240 of these guys now. Wow. When we first started doing this, there was like 100, 110 or something when I first started this database. Wow, they grow up so fast, don't they? All right, so tonight is S&P Saturday night. We always do or we don't always. Lots of times we do SPX Saturday, closed-end fund Friday. Some weeks we do Misty Monday and Tesla Tuesday. Been a while since we've got a Misty Monday and a Tesla Tuesday. All right, so let's meet our contestants tonight. All right, so our first contestant is XYLD. All right, this is from Global X. This is based on the S&P 500. It's a covered call fund. It's been around forever. This is 2018, but I don't understand why, because I know for a fact it's been around since 2013. So that is not going to make any difference in the calculations, though. So I'm not going to get upset about it. All right. So XYLD, these guys is pretty plain Jane fund. They sell at the money, basically at the money covered calls on the SPX about a month out. So it gives you a fund that makes up, about 12%, and it doesn't get just a ton of upside. It's kind of a middle of the road fund. Well, anyway, let's see how they're doing recently. So the yield is 10.4, but the NAV for this quarter's gone from $40.08 to $40.92. Not bad. It's up 2%. At least it's up. I told you these guys don't get a lot of upside. We're going to see. I think we'll see ones that do better than 2% over the course of a quarter. All right. The next one is JEPI. This one's been around since 2020, May 21st of 2020. Now this one's also kind of a plain Jane covered call fund. It's based on the S&P 500, and they sell index options, but they do some different, they have a few little variations on it. But in any event, they pay 8%. A lot of people are really happy with this fund. I bet it ranks pretty high on the stable dex, which we usually look at in a second, but I'm just going to scoot over there. Yeah, it's a 111 on the stable index. Anything above 1 means stable. Anything under 1 means unstable relative to the rest of the market. So yeah, it's 11% more stable than the average, market participant, let's just say. All right, next we have XYLG. Now this is also from Global X. This has been around September of 2020. Now this is different than it's the same as XYLD, but it's different. So here's how it's different. They only sell, it's based on the same index, same strategy, but as I understand it, they don't write options on the whole portfolio. They only write options on half the portfolio. So just like XYLD pays 10, 12, 13%, XYLG pays about half of that traditionally. Now I know it's a higher number over here. Gosh darn it. I don't even really want to get into that tonight, but these guys that pay the half dividend, if they have a really good year, which these guys did last year, they'll pay a special end of year dividend, and they paid $2.14. Anyway, but their regular dividend during the year is half size. So instead of the 12% type yield, they make a 6% type yield during the year. Now they got a special dividend at the end of this year, and they got one at the end of last year. That's no guarantee it'll always happen. But as far as the regular payment goes, it's around 6%. All right, so that's XYLG. And see, they call this one the Global X covered call and growth. The end growth is in reference to they're only selling options on half the portfolio. So half the portfolio can grow unencumbered by options. They go up as high as it wants to. So and that's where they get the extra $2.14 with. They probably got some extra dab upside. It's been a great year. This isn't the worst looking fund here. Let's look at XYLG. And it only pays 6%, but let's look at it compared to JEPI, which we were just looking at, that pays about 8%. It's all also really steady. Let's see how these guys do against each other. They've been around for a while. All right, well, that's a good look for XYLG. You know that everyone says Global X sucks, me included, and it does, but I don't know. There's a time and a space for most of these funds. There's not too many funds that I just don't see any use case for. These Global X funds definitely have a use case, and it's spanking this JP Morgan fund. So, all right, back to the factor. So then we have SPY-I. SPY-I is from Neos, paying about 11.6 recently. NAV's gone from 53.02 to 52.83. Which is basically flat on the quarter. So, but it's not doing well as XYLD's NAV or JEPI's NAV. But anyway, SPY-I's a good one. The thing about it is, though, it pays a higher dividend. So it makes sense to me that it doesn't do as well on. It would make sense to me that it may not do quite as well on NAV, and it doesn't. So let's look at. I want to compare SPY-I to XYLD. XYLD. I guess we could use XYL. It doesn't matter. Those are both about the same. So we'll do XYLG to SPY-I. And boy, XYLG is looking good tonight. There's just so many people that think Neos can do no wrong, and no one ever. I've never met anyone that's thrilled about Global X. Maybe there's one or two people out there, but and Neos, that's all the Yomax haters. That's all they, you got to get Neos. You got to get Neos. And Neos is a good one, but lately, you roll this back 4 years and it's getting dogged by XYLG. Now, granted, it only pays 6%. SPY-I pays SPY-I pays about twice as much. So, you get what you pay for. SPY-I is going to give you more of your money up front. XYLG is giving you more of your money on the back end, or at least that's the way it's been working out lately. All right, so let's see who the next contestant is WDTE. Now, this is from Defiance. Now, this thing pays a 36% yield. So now we're talking some yield. But Well, what is a yield? Well, a yield's a tax on the upside. So I bet this one has bad NAV. Well, sure enough, NAV's down 5%. Just because there's no free money. Remember, if this one paid 36% and the NAV did as well as this one, no one would buy this one. No one would buy it. So the no free money doctrine gets us again here. So WDTE. All right. Well, let's look at GPIX. This is from Goldman Sachs, also based on the S&P, of course. Only pays around 8%. So it is a good comparison for JEPI. We'll probably compare those to each other. And GPIX's NAV is not doing as well as JEPI's. Now, that's this quarter. But let's roll it back since inception and look at JEPI. Let's see. Let's roll back since inception and take a look. Now, these both have the same yield. They're both around 8%. So this should be an apples to apples comparison. One of them doesn't have more tax on the NAV's upside. So yes, GPIX is the clear winner here. It is the clear winner here. So, or the clear better performer anyway. All right, that's GPIX. Next we have iSpy. Now this one is now the yield calculations messed up on this. I'm sorry. Okay, I need to fix that. So iSpy is disqualified tonight, or I doubt it was going to win anyway. We'll find out who does win and compare it to iSpy and make sure. But in any event, so forget about iSpy for right now. Then we have SpyT. Now SpyT pays about 21%. So it's not nearly as much as WDTE pays at 36%. It's both based on the same underlying, so I would darn sure expect SpyT to do better on NAV. And sure enough, just because of math, WDT's NAV is down more than SpyT. SpyT pays about half the yield. So it's pretty easy to figure out here. You can either have your money now or later. It's your money. You can either kind of move the process forward by doing covered calls or investing with these covered call funds where they sell premium and you get your money kind of monthly, or you could just do nothing, wait till you retire and let the assets grow unencumbered. And then at that point, you can start writing options, which is what I recommend. All right. So XDTE. All right. So, well, actually, now let's look at, I was going to say XDTE is a good comparison for WDTE. So we're going to compare those to each other. They both pay around 36%. One's from Round Hill, one's from YieldMax. Both of them's NAV sucks, but both of them pay a huge yield. So we can look right here. WDTE's NAV is down 5%, and we have Round Hill, same period of time, same underlying, same yield, so same tax on the future upside, but the NAV's down twice as much, and that's why it's ranked lower. XDTE has been a worse play than WDTE. At least this quarter. All right, then we have T-Spy from Tap Alpha. This one pays about 13.88, or that's what it's been paying. That's what it works out to this week. That can go up and down. NAV was at 25.57 90 days ago. Now it's at 25.23, so it's lost about 30 cents, down 1%. Not great. Then we have Spin. Now, Spin pays 7.96%. So now we're down in the category back here of like competing against a GPIX or a JEPI, kind of at the lower range. Spin is from State Street. It's based on the S&P. Based on the low yield, I would expect it to have really good NAV, and look what it does. It has really good NAV. In fact, it has the best NAV we've seen so far. Okay. Now, it also has the lowest yield we've seen so far. Is that a coincidence? No, it's not a coincidence. That's the way it works. So, all right. Let's look next at XPay. Now, XPay pays around 20%. This is a good comparison with the SpyT, but in any event, because they're both based on the S&P 500, they both pay around 20%. So the taxes are the same. So well, the NAV should be roughly the same. Now, XPay's NAV is off 2%. All right, SpyT's NAV is off 4%. So XPay looks about twice as good as SpyT, just comparing them to each other. And that's without figuring in some other stuff. But just real quick, that's a good look for XPay. Just a real quick look. All right. Next, we have EGGS, EGGS, also based on the S&P. It is from a company called Nest Yield, yielding about 15%. NAV went from 41 to 37. So that quarterly NAV's down 10%. I mean, that's pretty bad. That's the worst NAV performance of the bunch. Well, actually, iSpy. Well, no, iSpy. There's a math there. There's a problem. Okay. Well, and it looks like EGGS is having a little bit of a problem lately. But next we have SDTY from YieldMax. Now this one pays 24%. NAV's down about $2, which equals about 4%, 4.25%, something like that. But I mean, getting 24% yield, losing 4.25. I mean, it's not ideal. It's not ideal, to be sure, but let's see if there's any other better options out there. Then we have YSpy. This is from Granite Shares. Now, this is the highest yielder of the bunch. Now, the reason it's a higher yielder is because they sell options on the S&P 500, but they sell options on the leveraged S&P 500. So options on the leveraged S&P 500 have to have more implied volatility because the leverage product can move further up and down each day. But because it has higher volatility, if you're selling that premium, you can make a higher yield. This one's has about 53% yield, and the NAV's not too bad considering the yield. I mean, the NAV's dropped from 19 to 18, which is down 6%. I mean, that's not great, but I mean, paying a 53% yield, it offsets a good portion of that. All right, and then next we have SPUT, based on the S&P, of course. Instead of a call fund, a covered call fund, these guys are selling puts, but a short put is a synthetic covered call, so it's the same difference. You don't even need to own the stock. You can just sell the put. Just skip the stock. Sell the put, and you have the stock. You don't realize it. A lot of people don't realize it, but if you sell a put, you've essentially bought the stock. All right. Well, the yield on this is really pitiful at 5.4%. So I would expect this to have the best NAV of any of them. And at least its NAV is green. It's up 3%. All right. The next one we have is SBAR. I don't really know if this is an S&P 500, but we'll throw it in here anyway. This is a barrier fund. I think it's loosely based on the market. Anyway, may not be the best comparison, but let's just check it out. Paying about 11% yield, so there's lots of other things in here that pay 11 or 12. We can compare it to SpyEye, which is probably going to be a tough comparison, but let's just go see. So SBAR's NAV went from 26 to 25. It lost about, what is that? That's 20 cents. It lost 20 cents over the course of 90 days. That's not too bad. That's less than a percentage point. And it's making an 11% yield. So you have a flat NAV, 11% yield. It just comes down to your risk adjusted rate after that. I'd be interested to see how SBAR does against SpyEye. Now, SpyEye's NAV was down less than 1%. SBAR's NAV was down less than 1%. It may be a pretty similar, maybe a good competition here. SpyEye right here, and then we have SBAR right here. Well, what did we mess up? Oh, I see what I messed up. SBAR. All right. Well, SBAR is a barrier fund, so it has kind of protected downside. I don't even want to get into it right now on how it's protected, whatever. So this one, the jury's still out on this one. But what I'm trying to say is, if the market craters, SpyEye will have more crater risk than SBAR. Although, I mean, neither of these funds want the market to crater, but I think SBAR might be in a little better shape. It depends on how far it craters and how fast it snaps back. So in any event, hopefully that doesn't happen. Hopefully that doesn't happen. All right, so let's look at some of these other metrics. So the most basic thing to look at is the yield and the NAV return, but there's more to it than that. That doesn't even tell you the whole story. The max factor is based on more than just that. So let's look at some of these other metrics. Let's look at the stable DEX. This is probably my favorite. This is a cool metric. So 1.46, that means it's 46% more stable than the broader market, than the S&P 500, in other words. And look, so the most stable one on here is SPY-I. And I like SPY-I. I don't have it, but I wouldn't have a problem getting it. A lot of you guys like SPY-I, and I can see why. You know, like I say, the SPY-I is where the NEOS is where the yield max haters go, and that's fine. And NEOS is a good fund, good family, well managed. I love it, good stuff. But this is why, because lots of times the yield max people don't. What they really don't, they think they don't like yield max, but they don't really like is the volatility, which is caused by the max yield. But whatever. So you know, something like SPY-I is kind of a little solution to that. Now, so let's run SPY-I again. Well, let's run SPY-I against. Well, let's look at some more. Well, let's just look at against the SPY, and we should since it's 44% more stable. I would think we should visibly be able to see the extra stableness. I would think the SPY-I line should not move as much as the SPY line. Let's see if we can spot it with our bare eyes. Sure freaking enough, you can see right here that when the market cratered, I guess that was well, that was April right here. Was it? Yeah. SPY, the market, and I remember it was down 15%. All right. Well, SPY-I was down from 13,000 to 12,000. So it lost 1,000 on a base of 13,000. So it's 1/13th. 1/13th is about 8-9% or 7%. Sometimes. Yeah. So I mean, it's about half. It's about half as volatile as the SPY. Now, of course, that hurts you on the way up. You want the stock to be volatile when it's going up. You want it just to shoot right up. You want it to perform like Palantir does on the upside, and then when it drops, you want it to drop like a buffer fund or something, or you know. So I mean, we all want it all. I get it. Chad wants it all. You know, Chad wants it all down there. Did you get any rain down there last night? Or tonight? I saw that Leak City and Texas City, and I was moving off towards Galveston, had a tornado, and then there was a hook echo out east of town. Anyway, I was thinking about you, Mr. Chad. I'm sure you're all right. Well, we'll see here. I haven't appointed a winner yet. Well, another thing is I don't name the winner. The winners are they have to earn it with providing the best risk-adjusted reward. As you guys know, sometimes I will override it if I don't like it, and I'll make it editor's choice. But I wouldn't have a problem making T-SPY the winner. I mean, we have to look at the data though. We're data driven. Let's follow and see where the data leads us. But yeah, I have no problems at all with T-SPY. Yeah, or the winners exactly. All right, hit you a little bit. Okay, well, you know they exaggerate everything on the weather. I follow a weather influencer, and he's a kid, and his name is Max Velocity. He looks like he's probably 25, fresh out of college. I think he probably took meteorology. I think he's a meteorologist, and he does weather. He has like a 1.6 million followers. I love his content, but anyway, he was covering those storms tonight. Why couldn't I should have done weather content. I couldn't. That would be so easy to do. Just when a storm comes on, just pull it. That'd be so easy. Anyway, I wish I would have had that idea first. All right. Well, let's see. It looks like, let me switch channels here really quick. All right. Well, let's get back to the metrics. Let's see where the data leads us. So back to the stable DEX. GPIX is every bit as stable as SPY-I. And okay, they're the most stable. And I don't think anyone would dispute that. The least stable on this bunch is, well, XDTE, and eggs. We have some data problems down here, but I need to look into that. But the less stable ones, at least the ones that are moving around a lot more, are eggs and XDTE from oh, I'm sorry, XDT from Round Hill. Yeah, and that would make sense because XDT pays a gigantic yield. Yield's a tax on the future NAV upside. You can almost equate yield with risk. Not really, but anyway, that makes sense. That would make sense. All right, so let's look at the Quandex. This is the long-term max factor. And now this, you have to have been out a year to be on this list or to make the metric, but all of these have been out a year, it looks like. Okay, well, so the Quandex has spin number one. And I mean, if you think about it, spin's the only one of these dogs that spin has the best NAV. Spin's NAV is more than double the next closest competitor. You know, the difference between 3.37 and 7 is double. More than double. So, I mean, so using that logic, JEP-I's yield would have to be double to justify double whatever spins is to justify a risk adjusted, reward type basis. And that's without even factoring in the volatility and some other stuff. And it's the same yield. So, spin looks a lot better here because it's able to produce that yield and to produce twice the upside. But anyway, that's the Quandex. And so it goes back over a past year. When we do the short-term max factor, it may be a different group, or you may have different winners. But anyway, JEP-I looks good also on the Quandex. XYLD's had a good year. It's up 2% and paid a 10%. NAV's up 2% and it paid a 10% yield. That's not bad. And NAV's gone from like $40 to almost $41. That's not bad. Over just 90 days, it's better than Blocks has done, or any of the dogs that I had. It's better than K-Yield has done. But be that as it may. All right. So let's look at some other metrics. Let's just rank this by 1 year total return. It surely, I would think that spin would have been number one because spin won spin won the Quandex, which shows the best risk adjusted reward. But actually, if you just look at the best total return, GPIX, SPY-I, and XPay have a little bit better total return. Spin, but anyway, spin won the Quandex. All right, well, let's go to the short-term max factor. This is the max factor. So there it is. So spin gets the short-term also. Long-term, short-term. It's doing well. I mean, over the quarter, it has twice as good of NAV as anything else in here. Twice. So it would have to have way less yield, and the other ones would have to have way more yield for it to be a decent idea to use them. So anyway, spin, JEP-I, XYLD's number 3, SPUT's number 4, GPIX is number 4. All right, so editor's choice. I'm trying to think if I want to override this. No, I mean, it's spin. The top 3, they have, they're stable. They have good 1 year total return. They have good quarterly NAV return. Anyway, yeah, no override. That's it. That is the official list tonight. Spin, JEP-I, XYLD, SPUT, GPIX, iSpy, which was not in there. It's disqualified. Let's see if iSpy could have beat spin. Let's see how iSpy compares to spin, just to make sure. Now, iSpy sells 0 DTE options. It's kind of not very many people talk about this one. It's not a real popular fund. All right, well, let's just look at them both since inception. Yeah, Spin looks good there, and then you could see Spin protected capital better on the way down back when the market pulled back by a little bit. I mean, there's worse funds out there than Spin. Their SPY-I beat Spin head to head, and a lot of people like SPY-I, and that is a good one. No one would argue with you for getting SPY-I. That the NAV on SPY-I's gone up $1. The NAV on Spin's gone up 20 cents. But SPY-I's NAV started at a higher spot. It's similar type NAV performance. And SPY-I pays a higher yield too. So yeah. So yeah, that's a bad look for Spin. Or not a bad look for Spin, but that's a good look for SPY-I. Let's look at it this way. Yeah, and over the last quarter, yeah, it's a good look for SPY-I there. Just been kind of a rough quarter, but SPY-I's managed to put together a little bit higher total return. Spin to win, yeah. But SPY-I gets honorable mention, or I mean, SPY-I's the editor's choice or whatever. But because I mean, come on, Spin only pays 8%. If you can get something that performs a little, even if it does have a little bit more risk, yeah, SPY-I's editor's choice tonight. Can we build a SPY pie? I guess we could. All right, your dad's throwing some money at the max pie. Nice. All right, so we just need to. So we never really decide, but I think we should take a look at it. We should try to reallocate once a quarter because that, or maybe once a month. We should at least look at it. So we've already done it for this quarter. I gave them to you the other day, so that's the February reallocation. So then maybe April 1st, we should take a look. Hopefully the same trends will persist, but we'll take a look and tune it up. Yeah, no, I like Ryan Hall. I like Ryan Hall a lot too. You know me, like I was telling you on my I'll subscribe to anybody. I mean, I won't subscribe to anybody that I don't like to watch, but if I like him, they do a good video, I'll subscribe and usually. So I probably have 6 weathermen on there, but yeah, it usually ends up on Ryan but yeah, what a great idea, a weather channel. That'd be so easy. It's fun. Oh my gosh, it'd be so easy. So easy. You just make bank. I mean, I just sit there watching these guys and they're getting super chat after super chat after super chat, and people are saying, how does it look in Galveston? He looks, well, it's gonna pass by in about 30 minutes. It looks, I could do that all day long. Easy peasy. Easy peasy. Anyway, yeah, Ryan Hall's really good too. He's from that beautiful state of Kentucky, up there with Miss Corey. I don't know if you guys remember Corey. She was in Rod's Discord, and she went to New York a couple of years back. High yield influencer. She's a good Kentucky girl. Her and her husband live in, I forget exactly where they live, but they're Kentucky folks. All right. Yeah, so April 1st is the next one. Maybe we should look every 2 months. I kind of think every 1 month we might mess it up too much. We've already done it for this month. So yeah, April 1st. We'll do it. So what we'll do a 6 time a year rebalance every 2 months. And I don't know what that's called. I mean, there's quarterly. I don't know what every 2 months is called. Bi-monthly, or would that be, or bi-monthly means twice a month, or anyway. But yeah, we'll keep an eye on it. I guess also we can have emergency reallocations too. If something drastically changed in the market, some fundamental thing changes, we'll make the pie a lot safer if we need to, but we could also make the pie more aggressive. Wouldn't it be great if the market pulled back? I mean, no, it would be great. I don't want that to happen. If that did happen, maybe on our April 1st allocation, we add some risk to it. If we get a pullback. So yeah, we're gonna make your pop some money. We'll call it what we want to call it exactly. Exactly. All right. There's 15 of you guys here. It's a pretty good crowd for Saturday night. What's everyone doing? What do you guys want to talk about anything? Let me see what else I have to talk about here. Did anyone watch the Daily Factor show? So the XOMO one, or the weekly. This was the weekly factor. I pre-recorded it. XOMO, killing it, paying a 28% yield, but the NAV this quarter has gone from $12 to $13.38. So it's at 11. It doesn't sound like much, but $2 is a lot of money. Or $1.50 is a lot of money when you just start at $12. That's it's 11.97%. That's pretty good money. It's pretty good return on your investment. Then that 28% yield is just gravy. And then when you factor in that it's 57 on stable decks, a 0.57, I mean, it's about half as stable as the market, which isn't it's super stable, but it's a lot more stable than some of these other dogs that it was. And these aren't dogs. These are the top 20. But some of these top 20 ones got to the top 20 by taking a heck of a lot of risk. And I'm looking at you, K-Silv, 8 times as volatile as the market. So, but I mean, like I say, volatility is good on the way up and bad on the way down. Is, you want to have a volatile stock that's going up, but then when it goes down, you want it to, you're like, who me? You want it to stop going down. There's a stock out there that can do that in real life, kind of, an ETF. Let's bring it up on the screen. It's called BTOP. I mean, it's the idea. They use technical analysis to decide when to go to safety. But if the market, whatever they're following takes it starts to go south, they'll just invest in bonds for a few weeks and their price will go straight sideways. Now, I mean, and then when they get a risk on signal, they buy Bitcoin and Ethereum. They get a risk on signal like they did in July of 25. It's off to the races. Load up on Bitcoin and Ethereum and ride that price up. And, then the price starts to go down and then they get the safety signal and they have bonds. Bonds really can't make or lose much. So just, the price goes straight sideways. So, but yeah, wouldn't that be great? We all want a fund that goes up like K-Silv, but goes down like I don't know what the safest one is, but goes down like one of those funds that's the totally buffered fund where you can't, where if you hold it for a year, like T-Jewel. We all want one that goes up like K-Silv when the market's good, and then goes down like T-Jewel. And T-Jewel, you can see, I mean, I guess it does go down. But look, it's a little bit deceptive to look at it this way. Yeah, so T-Jewel can go down. So in April, it dropped from 28 to 26.5. It dropped $1.50. That's nothing. Basically, you know what I'm saying? Was that 5% and the market's down? But it can still creep up with the market, but it only got about a third of the downside in that pullback. So that's the dream, to have something that goes up like K-Silv and something that goes down like T-Jewel. William's in the house. Yeah, you guys have heard of BTOP, of course. But yeah, BTOP's an interesting one. Why can't they make that with stocks? Somebody like Tuttle, could do something like that. It's Max or Roundhill or whatever is not going to do anything like this. Why can't they come out with something that looks at stocks and so you're and it does stock stuff, covered calls, bullish stock stuff. I don't know, sells, puts, whatever, whenever the technical indicators spot momentum. And then whenever momentum leaves the market, exits the stock covered call positions and goes to bonds or even goes to, maybe even goes to a tail risk fund, like something like ATTR or ONO. ONO's not out yet, but you guys get what I'm saying. Andre's in the house. Andre, I owe you. Hang on a second. owe you an apology. The other day I was talking about getting a super chat, and I couldn't remember who it was from, but it was from you. And I think I said I thought it was maybe from Chad. Chad's very generous also, but Andre gave me a very generous super chat the other day, and I appreciated it. And Chad's always, like to say, Chad's generous and done very generous stuff also. That's why I got confused. Okay, so Andre's saying I should try a weather financial stream, YouTube weatherman, Max Velocity. I get it, your name's mixed up sometimes. Yeah, Max Velocity, Max Convexity. I mean, hang on a second. Maybe I should do a collab with that kid, but oh gosh, man, that if it's it's always easy to think of. For me, I always think of great ideas 3 years too late. I mean, that'd been a great idea 3 years ago. Now Ryan Hall and Max Velocity have the market cornered. I'm working on some other ideas. There's other things that are easier to talk about than ETFs that I'm thinking about doing in addition to this. Andre's got more. Well, yeah, I hear you. Everyone has more money than me, but that's fine. That is fine. But yeah, I wish I made some bad decisions along the way. I could have stacked some pretty good money, but I made a couple of bad decisions. I had a lot of fun though, actually, back in the day though. But anyway, all right. All right, these guys are just busting each other's chops in Discord. All right, so let's see if there's any other comments, anything you guys want to talk about. Let me go through the tabs and see if there's anything else we need to talk about. So XOMO's number 1, K Gold's number 2, Fiat number 3. Can you believe that? And Inverse is number 3. The Fiat being number 3 illustrates a point that I'm constantly trying to make, that I think a lot of people don't get. Though a lot of people think, that a fund sucks. It's always going to suck. Like ULTY is an easy example. ULTY sucks because, I lost money and all that. I knew somebody that also lost money, so it sucks. Well, not really. Not really. There's a time and a place for ULTY. This summer, it was in the top 10, 20 of the max factor constantly. So was blocks, because over that time period, it was doing great. It had positive momentum, it was paying yield, doing great. And you compare it to all the other, ETFs in the universe. Fiat is, a lot of people say Fiat sucks. Well, yes, Fiat sucks for long-term investment. Obviously, the 1-year total return's negative 48. That doesn't mean that, remember, this is a trading index. Fiat is, as a tactic, Fiat might work. This is a trading index, not an allocators index. I mean, so anyway, but I don't expect, I'm not saying Fiat will be on here forever. Hopefully Coinbase will start going up again and Fiat will drop off. Hopefully Bitcoin will start going up. Bitcoin starts going up, blocks and ULTY will be back on this. This is a follow the money, follow the momentum. ULTY will probably go straight to the freaking top of this if, from Rex, if we can ever get Bitcoin to go up again. So, but anyway, time and a place for everything. Lately, there has been a time and a place for Fiat. Has it been a great investment over a longer period of time? No. Is ULTY? No, not really either, but there was a time and a place for it, and there'll be a time and a place again. Just depends on the market going up. Then we have ASGI. Now this is a good one. I know you guys like that. SLJY is a real popular one with you guys. Anyway, I thought this is a pretty good list. Look at all the safety on this list. I mean, so okay, we have XOMO's oil, and that's also that's a value play. Or K Gold is gold, and it's a diversifying type play. Fiat is just a straight inverse, so that's a bearish play on Coinbase, which is basically a bearish play on Bitcoin. So then we have ASGI, SLJY. So ASGI is materials. Basically, that's materials are, I'm going to throw that in the value camp. Even though that is a sector of the economy that's growing lately. Silver is also for diversification. Okay, this is the only growth stock on the thing. Taiwan Semi. Well, this is selling options on. This is a growth one, but all the other ones are some type of value or protection. Because the market is just, the market's really dicey lately, especially with all the Bitcoin based ones falling. There's nothing in here that has anything whatsoever to do with Bitcoin, is there? Or DeFi or anything like that. I mean, TSMY does indirectly because they make chips. They're using mining rigs. I mean, that's about as close as it gets. But other than TSMY, based on a growth stock, all these other ones, well, and Chippy's also, I'd call Chippy growth. But all these other ones are gold, or dogs of the Dow strategy is also a safety type strategy, value type strategy. River North Opportunities Fund is a value type strategy. I mean, I would throw it more in the value side. WEEI is oil, also a value or diversifier. XLBI is building materials. XLII is industrials. These aren't like, hotbeds of the economy like AI and DeFi. Those are growth, and these are for stability generally. More gold. HTLB is an interesting one. I believe this is either the first week or the second week, maybe, that it's been in the fund. Let's look at this thing really quick in case any of you guys didn't catch this show today. I think I talked about it a little bit on the show today. But this is from UBS or eTrax. I mean, I think UBS is the company. Maybe eTrax is the brand. Now, these guys brought us, what did these guys bring us? I think these guys brought us SLJY, or these guys have another fund. And one of you guys was talking about it in the comments of the video, and I forgot what it was. But yes, UBS has brought us another fund or two. Anyway, these guys are, I'm trying to think. These guys just use they double lever an index that's based on value stocks, because what they don't call it value stocks, but they call it high dividend, low volatility. And I'm going to call that a value stock. It's the opposite of a growth stocks would be low dividend or zero dividend and high volatility. So it's just kind of it's a different discipline. And these guys take those kind of boring stocks, but they double lever them. So this is an interesting, novel idea. Anyway, it's the first week. It's in the list. Let's just look at it. Let's just look at HTLB. Again, SPY since inception. Boy, HTLB is taken off lately. Well, no, I can see why it got on the list. It's making SPY look really bad. Like I say, this is the age of, growth is out and value is in, and this is what you get, right? So what are you guys talking? Oh, you guys are saying you like Chai. Chai, it's a closed-end fund. CHY, is it China-based? I mean, I'm not trying to be. Anyway. Okay, so anyway, you guys were talking about it in the comments, so we'll put in Chai versus Chippy. Well, now we have to see what the heck Chai is. Chippy's making it look bad. Chai pays it. That's not a bad dividend. Look at Chai, paid 40 cents over a quarter of a year, which is $1.60 if it were a year, and that pace continues. It only cost $11. So $1.60 on 11 is like, what, 13, 14%? Not bad. Not bad at all, right? Chai is the Calamos convertible high income fund. Okay. I'll look at this. Heck yeah. So why is this not on our list? Well, and the reason is because it's a closed-end fund. And I don't want to make a comprehensive list of closed-end funds, but I do want to cover stuff that you guys want to talk about. So let's put Chai on the max factor, and it's going to be our 221st ETF. And if there's any other ETFs you want on here, or ETF, or in this case, a closed-end fund. But Anything else you guys want on here within reason? I mean, I know we could just do a search and put 1,000 closed-end funds on there, but it's kind of a pain to manage this database. And I want to try to stay focused on the stuff like blocks and JEPI and JEPQ and SPY and the stuff that I kind of know about a little bit. So, all right. So anyway, Chai is now on the list. Chad wants to put his whole portfolio into Chippy. He's close to doing it. Oh yeah, Chai. That I see what you're saying. You like Chippy, but Chai's a closed-end fund. Yeah, I got you. Okay, I read that too fast. Every time you blink, it's up 7%. Uh-oh. There it goes. It's up 7% again. Did somebody say CAIE? Now there's Marcus talking his book. He found these things called auto callables, and that's all he could talk about anymore. Marcus, this Saturday night on Valentine's, and you ought to be out with your girl, with your woman. You take her to. I hope you took her to dinner, or your fiance. Anyway, or maybe he forgot, and he's sitting on the couch right now, and she's in the room. He's sitting on the couch with his laptop. Who knows? But anyway, I'm glad you're here, Marcus. Thanks for being here, bud. All right, let's look at WTPI since there's a question about it. WTPI. So what is this? Wisdom Tree? I'm trying to think. I just see so many of these. WTPI. Wisdom Tree Equity Premium. Oh, geez, we're going to have to put this one on the daily factor. I mean, how is this one not on the max factor? This is even an ETF. I don't know that it's options, but it pays a 10% yield, so I don't care how they're doing it. I mean, and here it is. The index is it's U.S. large cap, target 2.5% put right. Okay, so they're selling puts. Like I always remind everyone, selling a put, even without the stock, you own the stock. It's essentially, it's like owning the stock and writing a call on it. But you can do it with just by selling a put. So it's a really neat trick. Now the 2.5% target, maybe that means they go 2.5% out of the money, or maybe they try to make 2.5% premium a month, which seems kind of high. Because if you're trying to bring in 2.5% premium a month, that would be enough to pay a 30% yield. And these guys are paying 10%, but it means something. Who knows? Who knows? Who cares, right? Let's go look at it. I care. I love me a good put right fund. But yeah, all right, gained access to institutional option overlay strategies, low cost, 40 Act vehicle used to complement exposure to the S&P 500 index with potential for higher risk adjusted returns. Used to help lower portfolio beta, reduce downside risk, manage volatility. Oh, and this used to be Put W. Okay, so Put W has been around forever. Put W is on the max factor. We probably need to go update the symbol though. Okay, so Put W, they aren't showing it to us anymore because it closed, or let's see here. Well, oh gosh, I think I see what happened. All right, Put W. So that's over 4 years. Not too bad. I mean, it's just covered calls. Short put, covered calls, same difference. No, I'm glad you checked in, Marcus. That's awesome. Thank you for being here. WTPI does look interesting. So surprised Marcus, or Marcus didn't know about it. I mean, I think I heard somebody talk about this the other day in Discord. So I was going to click on what the, see if they had any information on the index itself. Let's look at the, so we check out the presentation. That's just like a sales deck, probably. The case. Let's look at what case they're trying to make for this thing. Oh, okay. So, okay, this is interesting. All right, so here's what it actually means, the 2.5%. This is really what I wanted to find out. Options are written at a strike price that's the higher of either at the money or an exercise price that has a premium that is close to 2.5%. So they go out, okay, so they write an option that's 2.5%, that has 2.5% of value. So, S&P is trading at 700, so 2.5% would be, what is that, 17 and a half, something like that. I mean, those are the numbers. I don't know where the decimal place is, but so you get, so on a $700, in other words, on a $700 stock like SPY, just using that one, 1% would be $7, 2% would be $14, 2.5% would be $17.50. So they will write an option that they will go as far out of the money and earn that $17.50. And if they can't earn it because volatility is crushed, they'll just sell an at the money option. But if possible, they want to go 5 or 10% out of the money and still make that premium. Yeah, that's a good strategy. They go as far out of the money as they can, where they can still get their 2.5% premium. Now that's interesting. So now here's another twist. They write them twice a month instead of quarterly or longer, and they use 2 tranches, which I think is probably a good idea. So they use American style options. Expense ratio 44 bips. That's not too bad. This just looks like sales BS. I'm just kind of scanning through it really quick. All right. They're saying put writing has been used by professional investors for decades as a solution seeking to increase the yield and lower the volatility of equity returns over various market cycles. That's absolutely true. And writing a put, like I always remind people, same thing as owning the stock and selling a call. It's exactly the same. It makes no difference. It's mathematically it's the same. So, and you know why I bet you funds like it, because when you write a put, you have expenses when you trade. You can write a put and you can affect the same transaction with one trade. You don't have to buy stock, hold up money, and then sell options against it. But your risk-adjusted return should be very similar. Anyway, but Warren Buffett, big time, he famously sold a bunch of puts in Coca-Cola. He wasn't doing it to get a yield, I don't think, so much as to he really wanted to acquire the stock, but I'm sure he took the yield. I mean, the yield still, helped at the end of the year. It was during 2008, I think, 2008, 2009. So if I remember, he wrote like $8 billion worth of options over that time. That's right, over that time period. The Coca-Cola trade was back in the 90s, though. I'm confusing 2 stories. He wanted to pick up some Coca-Cola, and he sold puts on back in the 90s. All right. So they're saying WTPI has historically provided a measure of downside risk mitigation. Well, let's see if that's true. Or let's see how true it is. So I was trying to measure it in a pullback, but here we have SPY, and I don't know, this is 2022. But, just looking at their numbers, it was at 13,000. SPY was your balance, your portfolio balance went from 13 to 10 and a half. So that is about a 20%. Well, heck, we remember it's 2022. I think at worst it was down like 30, but it finished the year down 22% or something. So in any event, you could see the put W only fell about 4% about 6% over the same time period. So yes, it is getting better. It is buffering you on the downside. Unfortunately, a put caps your upside, because a put is the same thing as a covered call. Just a naked put, write a naked put, you've essentially done a covered call. You just may not realize it, but you've done one. All right, Andre, you picked up a few shares yesterday. From what you understand, they keep about half. Oh yeah, and then reinvest it back. Yeah, that's what it looks like, because 2.5 times 12 is 30. but yet they're paying like they're paying what? Oh, an 8.4. Well, hang on a second. Over the past year, they paid about 10% of it out. So it would look like they're paying about a third of the premium, of the gross premium they write. They're giving you about a third of it back in the form of a yield. And then the rest of it, they'll give back to you in the form of NAV. I mean, in theory, yeah, they'll keep the rest in the fund. So the NAV ought to grow, that you ought to be rewarded on the back end for that is the way it goes. Of course, the market still has to go up. And they had a huge payment in December. That's good to know. That is good to know. And their target's 13. Okay, I was just taking this 10.4 as like, but yeah, target's 13. So that would make sense. So 2.5% a month comes out to 30%. And they're paying, and their target's 13. So yeah, it looks like they're paying about half of the gross premium they make, a little bit less or whatever. And Andre was going to call them Tuesday to see if that up to. Oh, you wanted to try to get them to raise the target from 13 to 20. Yeah. Who knows? Nothing wrong with asking. Let's look at their presentation. Oh, shit, I don't want to do that. Let's look at the quarterly fact sheet. So for the quarter, WTPI's NAV 4.3, SPY's NAV, it beat, look at this. Quarterly NAV return is beating the SPY. Yeah, gosh darn it. Hang on. I know that put W's on here, maybe, but it may have dropped off when the name changed. Let's just run this real quick and see what they're, we're having a data thing here. For some reason, it's not giving me the trailing 12-month. Oh, because it doesn't have a trailing. This is going to be a problem anytime there's a ticker change, because then I'm going to have to go back and, gosh darn it. I mean, we'll get it eventually, but we're going to have to, gosh darn it. Yeah, see, here's the problem. You put W and they can tell you the trailing 12 months. So I guess I need to put that number right there and then start keeping track of it manually, but then use the WTPI price data. Or WTPI. I was saying WPT. W Wisdom Tree, WTPI. Okay, I'm sorry. That other one was wrong symbol. So I guess what I would do is put the $4.26. Look, they do have it right because I put in the wrong symbol. That makes sense. Let's go back and check this. WTPI. They're showing the trailing 12-month dividend is 348. It says 4 something on the other one, but sometimes there's a timing difference. One of them picks up the dividend before, or a dividend at 12 months ago was rolled off on one of them, but not on the other. There can be slight differences like that. So, all right, well, but yeah, it looks interesting. Chad says Wisdom Tree sounds like a fun. You see on those 3 AM commercials. Yeah, Wisdom Tree. Andre said they could easily pay 20% and still have cash. Yeah, okay, so they could this year, right? Based on what the data set we have, correct. Wonder if next year isn't like this year. I mean, they may be doing it. They probably have a longer back test, and maybe they're doing that on purpose because. Who knows? But yeah, it looks like they could, if they were Yieldmax, they just pay you 30%. That's all Yieldmax does is if they're selling 2.5% premium, they'll just give you the 2.5%. It's your money. They figure you can do what you want with it. So I think these guys don't want to be like Yieldmax. So, but yeah, I hear you. They could probably pay more. See what they say. It'd be interesting to see. Yeah. It does. It gives that vibe. So what else do we have to look at? So, oh yeah, this was last night's Friday night, closed in fun Friday. That was a good show we did last night. I think all of you guys were here, but if you weren't here, ASGI won. UTG came in second. You guys know what UTG is, don't you? Do you know? Because I know. UTG is the Cushing Midstream something. I don't know. Cushing Midstream Pipeline Infrastructure or something, I think. It's that. Let me go look it up. I'm trying to get better at closed-end funds. Oh no, it's the Reeves Utility Income. Which one's the Cushing? The Cushing is it has an X in it, doesn't it? Gosh darn it. All right. Well, let's go back to this. Or is Fax the Cushing? Fax is the Cushing, right? Now let's go look. No, Fax is Aberdeen, Asia Pacific. What was the Cushing one? Was it? I thought it was UTG. And it wasn't UTF either. I guess I could just type in Cushing and see. Okay, that's why I said it had an X in it. Well, NXG is the name, but it's SRV, Stevie Ray Vaughan. Okay, but somehow I'm gonna have to remember to associate Stevie Ray Vaughan with Cushing. So I don't know how I'm gonna do that. I thought it was UTG. All right. Well, in any event, those are the good funds, and we could see that the Stevie Ray Vaughan fund was it. I thought it did really well. Oh yeah, it did. I mean, it was like 7th place or something, 17% yield. Steady NAV was not to like. CLM was down here like 8. I mean, of course, it doesn't factor in the dripping of NAV, rights offering stuff, but I mean, so it should even do a little better than that. Everyone knows that's a good one. Sirloin, boy, Sirloin is steady. Look at Sirloin's. Look at Sirloin's stable dex. 3.08, meaning it's 3 times more stable than the SPY. SWZ. You guys know what SWZ is, don't you? Because I don't. I forgot. Oh, gosh. This is the worst one ever. This is the Total Return Securities Fund. And here's their website. I mean, what in the heck? I don't even know. I think it'd be even hard to find a template to do a website like that. I guess you just do it with HTML and just hand code the most basic website in the world. Man, I took an HTML class in like 1998 and I was making stuff to look better than this or as good as this. All right, Chad, what did you do today? You just got back from Great Wolf. Did you go on a little staycation or whatever? Your son did the magic thing, ran all around the park. Yep, heck yeah. So is there, the Great Wolf is in Dallas, right? Or Arlington, something like that. I didn't know if there was one in Houston too or down south. Yes, WPay is changing their ticker name and they're changing their strategy. And it's Top W. Marcus has the deets right here. It's Top W. So Top W is the top 25 S&P quarterly cycling. The bottom 4 will fall off. But unfortunately, it's not based on, they ought to base it on the max factor. I mean, a fund needs to come out and I'll license the max factor to them and just kick out the bottom 4 in the max factor or whatever. But they don't have to use the max factor. You could also use total return. But I would, or you could also use yield even. I mean, although yield wouldn't be a great way to do it. But I wish they would somehow cycle based on performance. They're doing it based on size. And we all know that size definitely matters. But so it's just going to be a fund that goes with the biggest. I guess, I don't know. I mean, you don't get to be a giant company without, I guess maybe it'll work. I don't know. Oh, what? There's a tornado in Webster, or no, wait. What's in Webster? Oh, a Great Wolf. Okay. A Great Wolf Lodge. Okay. I was going back to the tornado because I saw League City and that's where the tornado was tonight. And yeah, I've never even heard of Webster, heard of League City, but yeah, I've never even heard of Webster. Okay. Well, nice. Nice. The Great Wolf Lodge. Yeah. We always go to the one in DFW, of course. My family goes to that one. All right. So, Andre, you wish that Roundhill would do something else about those swaps. Seems like they never fully get the 1.2 leverage the upside. Having said that, seems like GDXW and GLDW are tracking their underlying. Well, I wonder if that's because gold has just been on such a face ripper. So there's something when you use leverage, it's because they have to reset the leverage daily or weekly, depending on how it's done. And it causes volatility drag. It causes what really is decay. Because I'm trying to think of the way I've had it explained to me where it makes sense. I'm trying to explain it the same way. But anyway, yeah, those ones, that's always a problem with leverage. You have something that's double leverage, is what I'm trying to say. The market's up 2% one day, so your double leverage fund is up 4%. And then the market the next day, I'm trying to think this example. But anyway, because of the daily reset, it could be it's not going to get exactly double of the total performance because it's going to get double of the time until it resets, but then the reset can mess it up. There's a name for it, volatility drag or not volatility drag. It's I don't know, but anyway. Oh yeah, there is one in Round Rock too. When I was saying my family, I meant my family in Oklahoma. We used to take the kids there. My grandparents would take the kids, or my parents would take the grandkids there. And one time they rode the train down from Oklahoma with the grandkids and they went to Great Wolf, stayed down there for a weekend and took the train back and they had a great time. But anyway, yeah, the Great Wolf that's closest to Oklahoma is the one in Harlington, I guess. But yeah, of course there's one in Round Rock too. And just bring your money. Boy, that's the way with everything nowadays. All right, Andre saying, Max, your relative max velocity is tracking those tornadoes in Louisiana. I need to turn that son of a gun on. I can't watch that show without just getting insanely jealous. That guy's stacking so much money. I mean, like I always say, I'm glad I'm not doing the YouTube channel for the money, but I'm competitive and I want to figure out a way to beat the system. Everything's a game to beat. Everything's like poker. I mean, that's how the market is. The market's one great big game of poker. And if I make better decisions than you make, if you sell Apple and then I buy Apple and Apple doubles your money, or you have an opportunity loss, and we're basically it's a big poker game. That's the way everything is. But anyway, YouTube's the same way. There's only so many, it's an algorithm. There's only so many. I don't know. There's a way to beat the YouTube algorithm. I just haven't figured it out yet. If I do it, I'm going to have to donate the money to prove that I'm really not in it for the money. If I ever find a way to beat the algorithm, but anyway, I'm going to figure out a way to beat this darn algorithm. Oh yes. Chad's saying you guys should go to Kalahari. It's like 10 times. Yeah. Oh, and that's the one that's in Round Rock. And actually, I saw that one. I was driving by that, and I was like, "What is that over there?" And somebody said it's something called Kalahari, and I Googled it when I got home. Yeah, that's interesting. Yeah, that's what it was. I was like, "What is that?" I was like, it was because it was all this bright colors and it looked like Disneyland or something almost. So yeah. Jackson, what did I say about barking? Hang on. All right. So the room, it looks about like Vegas. Yeah, Vegas and Texas. It looks like a great place for the kiddos. What is that? Kind of like a Zen, probably a spa or something to look like. Now I gotta say, I don't know if Junior really needs. You really can't see, but it doesn't look like you could even fall that far. Come on, when we were kids, I mean, they make everything too safe nowadays. You have to fall and bust your face a couple of times to learn not to do it again. These kids nowadays are too protected, way too protected. Yeah, no, that looks like Vegas. That's pretty cool. That's pretty cool. It looks kind of like Great Wolf also. It looks, but yeah, better than Great. Let's see what it looks like here. It looks like Vegas, but for kids. Anyway, yeah, good stuff. Good stuff. You'll donate the payments from the MaxPi. Heck yeah. Imagine taking an escalator down to the game room because that's how they have it. So I don't know if that's speaking of Vegas. And this was a long time ago. This is the first time I went to Vegas actually in 89 or maybe 90. I mean, the Mirage was there, so it wasn't, it was, but the Mirage got built in like 88, I think. Yeah, I think it was 89 or 90. And I'd never been there, so we're walking up and down the strip. I was there for a bachelor party, but we were just during the day going to all the tourist trap things. I went down and checked out the two places. Hang on. Both the Luxor and the one that looks like a medieval castle, the Excalibur, had giant game rooms in the basement. And I got the idea that those were the one, I didn't have any kids yet, but at the time I was thinking it'd be great for, people that have kids, but anyway, and there's some really best game rooms I've ever seen too. The Excalibur game room, especially. Indoor roller coaster. Yeah, that's really cool too, especially in harsher climates. Like the Texas summers and stuff, are harsh. Like, well, kind of like the Minnesota winters, and they have the indoor roller coaster in the Mall of Americas, right, in Minnesota. So I got to get out of the elements. All right. Well, I'm going to get out of here, barring any last minute questions. I'm going to go watch my friend Max Velocity and see what's going on in Louisiana. No, actually, I'm going to turn on. I'm trying to get out of here because I'm going to turn on Call Sheet. There's some West Coast basketball games. I'm going to play some Call Sheet. All right, guys. All right, man. I will talk to you guys later. Now, of course, remember, not financial advice. Consult a professional advisor. And there's my PayPal if you'd like to donate and to the cause. And also, let's take one more look at BTC and see if it's still moving up. We'll look at BTC on Coinbase. It was at 70,000 earlier. I think 70,000. I forget the exact number, but anyway, it's at 70,329 now. Going the right direction. I mean, on the daily chart, we have a lower swing high. A swing is a bar with the low in the middle and a higher lows on either side. And that was a higher than our last swing low. So let's just put this on the chart. So just from a real simple perspective, we want to hold that line as long as possible. Hopefully go back. We really need to take back 80 and then 90 and then 100. I'm telling you guys, I know no one believes me but if Bitcoin would go back to all-time highs, blocks, ULTY, ULTI, K yield would just be insane. They would absolutely go insane. So we'll see. We will see if it happens. Maybe, maybe wishful thinking. Now, Chad's advice is don't trip and buy the dip. Hey, thanks, Andre. I appreciate it. All right, guys. Thank you so much. You guys have a wonderful evening, and I'll be back tomorrow with more content. I have a video that I'm working on, and then if nothing else, I'll do a daily factor show tomorrow night. I don't know what we do on Sunday, but I'll figure something out. Maybe we'll do the NASDAQ-based funds. All right. All right, guys. Thank you very much. And you guys have a wonderful evening.